How to use trend lines to trade successfully. First of all, we need to understand what are trend lines. Now, trend lines are a technical analysis tool used in Forex trading to identify levels of support and resistance. Usually it's based off highs and lows, and you typically use them in trending markets. But at the end of the video, I'm going to show you a way of how I use them to be able to benefit from trend continuations rather than trend analysis. Where to find them? On your MetaTrader 4, MetaTrader 5 platforms. If you open up your MetaTrader terminal, you'll see this line here where it has sort of like a dot at the end and the dot at the other end, and it's usually next to all the other drawing tools. Now, if you don't see this, if you right click on this dotted area here, you'll be able to customize the toolbar, and you might find it under this area here where it says available buttons. If you find it there, you just need to click insert to bring it over to the other side, and it will appear on your toolbar, and then all you need to do is click close. So how do we draw trend lines then? So like I said, usually you use trend lines in trending markets. You can see I've got a downward trend here, and what you typically look for is if a market is in a downward trend, you expect the market to be making lower highs and lower lows. And usually if you're using them for trend opportunities, you would use the highs of the lower highs, and you would draw your trend line like this, and what you would be anticipating is that if price comes back to that trend line, does it then continue to push to the downside? So like this example here that I have on $yen on a H4 time frame, if I was to draw a trend line just from here, just to show you how you actually do that with your MetaTrader, you can come up to that line there. So if I come up into this line, and what I'm going to do is I'm going to select the high that I want to work with and go down to the other high. Now, if you want this to ray out, which is something that I would suggest that you do to make trend lines a little more accurate. They are subjective pieces of technical analysis, but if you want to make a sort of longer, sort of more accurate area for your trend line, what you want to do is right click, come to properties, and if you go over to parameters, it will say array right. You need to click onto that. I'll also show you at the end of the video a way you can use your trend lines to point out different price points. But for now, I'm looking at this downward trend that's formed. Now, typically what we will be looking for is one or two things, like I said previously. The first thing is trend continuation. Now, for trend lines, you need at least 2 highs or 2 lows. And what we're looking for is essentially, we're looking for the second and the third touches. After that, trend lines can become a little bit of a sort of useless tool at that point. They work less after the sort of second and third touches after the 2 highs. So what we're looking at essentially is the first high, okay, is what we call our anchor point, okay, and the second area is what we call our formation. Okay, so that would look like that. So for this instance, this is where we're anchored to, this is where we're forming from, and then we're expanding that trend line outwards to look for areas around where price could come into contact with the trend line. Okay, you can see these areas just through here. Obviously price hasn't interacted with them directly at this point, but has come very, very close to coming into that. So it adds confluence if we were, let's say, using areas of support and resistance as well. If we're looking at sort of highs and lows to trade from, these are good examples of confluence with price. So that is a bearish trend line here. Let's go take a look at a bullish trend. So we didn't have to look too far away from our downtrend analysis to spot a upward trend line. Now again, all I've done is I've used the lows this time. So when the market is in an upward trend, we use the lows as our anchor and formation point. 2 lows, expand it out, and then we're looking for connections around that trend line for continuation. So in this example, my anchor point is here, my formation point is here. So these 2 lows, expand it out, you can see that the market comes into contact with the trend line. It's the first sort of touch after the trend line. We could argue that this area here as well has come in and around that trend line, but this one is a touch, a bounce away, and you can see the market accelerates from that. Again, when we're using trend lines in this way, it's used more as a confluence into the fact that price is moving to the upside. So that's how you draw them. You make sure that you find in an upward trend 2 lows that you can make an anchor and formation point from. In a downward trend, you're going to be looking for 2 highs to make an anchor and formation point from. So how can you use them in trading? Well, there's 2 different ways. Now, the first way is to use them when a trend comes to an end, because essentially for a trading point of view, you are looking for trend continuations initially from these points. Okay, now as a piece of technical analysis, I think that it's a okay tool to use. It's not necessarily my favorite tool to use in this way in particular, because you can see here we actually come very close to the trend lines, but we actually miss it on a few occasions. What you'd have to do essentially is update the trend line, so you would come in and come to that highs. That's what we call accelerated trend lines. It's a little bit more advanced, but basically all it means is the fact that the trend is a little bit more aggressive. So this one, you can see it connects with those points and then continues to the downside. So you can use accelerated trend lines like that, but essentially the way I like to use them is when price breaks trend, because what that tells me is that there's a potential reversal on the horizon. So when does price potentially end that trending condition? Well, it potentially ends when we get a very clear close above, and that would be here for me. That first initial break is here, but you don't know whether price is going to come back within the trend line and continue to the downside. Instead, we have quite an aggressive breakout. Now, if we're looking at the first trend line that we drew, the breakout comes here. So adding further confluence potentially that this downward trend has now come to its end. The second way, like I said, is in an upward trend environment here. We could argue the fact that when price breaks out of this minor trend line here, that the market is now potentially bearish, and we do see a little bit of a bearish pullback into an area of previous highs turned to support. So again, we have to use it with overall context of the market, but that is how trend lines are typically used. Now, the way I like to use them for trading and how to trade with them successfully is actually in a very, very different way. I like to look at trend continuations, but I like to use them in a way where it's called a counter trend line move. Okay, so the way I like to use them is if I draw a little example here, is if price is moving to the downside here, right, and we get a little bit of a what I would call a complex pullback in terms of the market starts to make a trend within the secondary phase of the market. Okay, now as trend traders, what you're trying to necessarily achieve is when that goes from being in a secondary phase back into a primary phase. And the way I like to do that is by using a trend line. So if I was to then connect the lows of this trend line here and I waited for a breakout of the overall trend, then I have a higher probability of that trend playing out. Really, really good examples of this on this downward trend here. Now, again, you need to make sure that price is making at least one higher high, one higher low, so that we can then put an anchor and formation point on. So if I look at this overall downward trend, there's a few ideas that you could use. And if I just kind of track down, one of the first ideas is in this area here. I can place my anchor point here, my formation point here. What happens is we get a breakout. This would be a good area for me to short with my stop loss above the most recent high, and we can see price continues to trade to the downside. Now, another one I can spot quite easily is over here. The market makes higher highs and higher lows. So if I was to place my trend line in and around that area there, I'd be looking for a clear close below. Boom, we get it here. Okay, I would be entering short trades here, stop loss above the highs, and looking to target lower areas of support and resistance. Here as well, we can place one like this. We have a higher high, higher low. Now this scenario is a little bit different because we don't technically have a new higher high. If we take a look at what's happened here, we've got the market that's pulled back. We get a new higher high, higher low pattern, and the market drives to the downside. It's not a necessity in looking for downward moves because what we're looking for essentially is higher lows for our anchor and formation points, but it can prove to be a little bit better if we were to get that pattern. But anyway, we get a strong breakout below. We could short here, stop losses above the swing high, target down at that low in general there. And finally, we can see there was a sort of trend line in here, an accelerated trend line in here. So depending on how aggressive you want to be as a trader, you could enter here or you could enter here. At this point, the trend may be coming to an end. You can see that there's lots of different support and resistance levels. So depending on how aggressive you are, again, you could be looking for that. But essentially, that is how I use trend lines for successful trades. Now, if we look for this area in here on this bullish trend, the same applies, okay? You know, and we can even see that here there's quite a large sort of trend line situation being built up, but the market is making higher highs and higher lows. Essentially, we have our primary phase, secondary phase, primary phase, secondary phase, okay? Now, it's in these secondary phases where we want to be looking for the anchor and formation point. So here we could draw a trend line like this, anchor point, formation point on this high. When price closes above that area, we can go long, stop loss below the lows, targeting at these swing highs. Market's extended up. It's now starting to make a new lower high, lower low pattern, anchor, formation point. When price breaks and closes above, I'm long, stop losses below the lows, and I'm looking to trade to the upside there. And this works on every single time frame, okay? What with the condition is most important, obviously, is trend, okay? So even if I go down to sort of a 30-minute time frame here, and what I'm going to do is I'm going to spot a level of trend, okay? So let's say I'm going to put the period separators on, and let's say it's something that you're looking to use from a day trading perspective, okay? So essentially what we're looking for is higher highs, higher lows on a trending condition. So we've got this period here on the 21st of March of this year, and we can see that the market is moving higher, okay? So let's say the grand scheme of things, we want to be bullish because price has a 50 above a 200 moving average. So we're looking for the trend conditions to be met. So that is met when the market forms a new higher high in the day. So essentially what we can do is if I go down to an even lower time frame, like the 5-minute time frame now, essentially jump into time frames, let's go all the way back to the 21st of March. What you'll see within that downward period here is the market making lower highs. So I have an anchor point and I have a formation point. Okay, so my anchor point, formation point. The reason why there's no formation here is because we don't really pull back at that point. The market doesn't rally again until this area. We start pulling back. Where's the key breakout? The key breakout is here. So from a day trading point of view, I can be long on the 5-minute time frame here. Stop loss is here. First target is always the first point of resistance. Okay, so in and around that point there, we can then exit a large majority of our position, bring our stop losses up to break even, and then just see if it rides, see if the market continues higher, and then we can take profits at other areas. But the important thing is, what is the higher time frame doing? We've got a situation here right now, okay? The market, this is a live scenario, the market is pretty sideways here, okay? But if we look at the price action on the day, the market has gone from making lower lows, okay, to a higher high, higher low situation, and now a higher high. So all we're looking for here now is a lower time frame pullback so that we can draw our anchor and formation point. So we go to the 5-minute time frame from today. What am I looking at here? Well, I need to see a little bit more evidence. I need to see price make that new lower high, and I need to see it make a new lower low so that I can draw my anchor and formation point, and then if price breaks above that, I can look to extend to the upside. Very similar here. Look at this 5 minute. If I was to draw like this, where's that breakout point? It's here. I could go long here, stop losses below the lows, looking to target a higher time frame level of support and resistance. So moving forward from that area, we were just talking about getting in at this break of a trend line here, and we can see actually I got in a little bit later than I wanted to, but essentially the break and close was here. I saw that price had come back into this sort of area, which would be more comfortable with that sort of close on the break of trend line. So I did enter a position here. I put my stop loss below this low, which you can see did not get triggered, and I actually put my take profit at a 2-to-1 risk reward ratio. So the risk that I had here, I times that by 2 and placed up at this level of resistance, and overnight price hit targets. So that's how we can use the trend line strategy for your own trading. So hopefully that makes sense. That's how you use trend lines to trade successfully. Thanks for watching this video update. If you have any questions, drop them down below, and I'll speak to you soon.